Hey fellow investors, it's Tuesday, December 8th, 2020. I'm Hoda, co-founder and CEO of StockCard, and here's a recap of today's market's noteworthy movements. The stock market indices finished Tuesday in agreement and in green. It seems lawmakers are ready to put their differences aside and get the stimulus package signed. The market indices took it as a good sign and surged above the zero line, pushing the S&P 500 index to a new record high. From my personal top movers list, shares of Stitch Fix were up by more than 39% on Tuesday. This company is shaping the future of shopping in the fashion industry. If you're following the gift of a stock portfolio on a StockCard's portfolio store, you'd know that I bought a few shares of Stitch Fix as a gift to my nephew and niece's portfolio because of the company's potential to shape the future. Stitch uses data and algorithm to put together a few clothing items curated for you. I was a member for a while and loved my Stitch Fix boxes every time they arrived. Recently, the company also allowed users to buy individual clothing items directly from their website. And that combination of personalization, curation, and ease of ordering is the magic sauce that pushed the company's stock price up today. The company announced its latest quarterly earnings report, and both revenue and the number of users were up by 10%, and the company guided for 25% growth in the upcoming quarter. That was enough to push the stock price high up. As I said, I have this stock in a long-term custodian portfolio that has at least a 10 to 50 years time horizon. But if I were a short-term investor, I would have loved to lock some gains here. The market may be getting too excited based on that guidance, especially because the average revenue per customer went down during the quarter. So that's something to consider and watch for those short-term investors. Look at the top losers of the day. Shares of MicroStrategy were down by more than 13%. This analytics software provider has recently caught my eyes because it took $50 million of its cash and bought Bitcoin as a way to secure its future against any possible global economic downturn. After that, the stock price surged to the moon. Today's price drop came after a downgrade by financial analysts at Citigroup, citing the stock price getting ahead of the company's potential. While this may seem to be a beaten down stock, it is still quite overvalued. I'm not jumping to buy shares just yet, although I like the company's operational strength. There's a vaccine war going on out there. If you're keeping up with the news, last week Pfizer said that it has to slash its vaccine production target by 1/5 due to capacity issues. It seems competitors are taking it as their chance to fill the void and run ahead of Pfizer. For example, Moderna, the second company in the queue to get emergency authorization for its COVID-19 vaccine, wants to be that company that fills the gap in production with its vaccine. At least that's what analysts from Morgan Stanley believe. Whoever comes out with a COVID-19 vaccine is a win for us all, but the stock market vaccine war is fun to watch too. As always, if you're looking for a list of COVID-19 vaccine stocks, there is a list of stocks for you on a StockCard. To get the list of COVID-19 vaccine stocks from a StockCard, visit a StockCard's Discover page and either type COVID-19 vaccine in the search bar or see the featured tab. That's it for today. If you like these quick noteworthy movement reports directly from my daily stock market research, please like and subscribe and share with your fellow investors. I'll see you tomorrow.